This trading week is that rare case when the US economic data makes no impact on trading sentiment. At first glance, the conclusion could be drawn from the economic calendar. In practice, the Federal Reserve policymakers will not allow market participants to take a break. Every day, they will make comments on a further course of monetary policy, entailing sharp moves in market growth. Still, we should not neglect upcoming macroeconomic data. And you're watching a regular calendar on our InstaForex TV channel. Apart from the Fed's policymakers, other key figures of major central banks will come up with their remarks. On Thursday, don't miss their comments on the prospects of monetary policies from leaders of the Reserve Bank of Australia, the ECB, the Bank of England, and the Bank of Canada. In every remark, investors will be looking for clues to when central banks plan to hit a pause button in monetary tightening if the cycle of rate hikes has been already suspended. Perhaps governors will shed light on how long the pause will last and when central banks intend to cut interest rates. In a speech by ECB President Christine Lagarde, market participants will take notice of her comments that will complement the minutes of the last policy meeting. Importantly, Christine Lagarde has never made comments like a bombshell. So this time the ECB president is likely to confirm the current rhetoric and the commitment to the fight against high inflation by means of rate hikes. The ECB is widely expected to raise interest rates two more times by 25 basis points at a time from 3.5 to 4%. With such prospects, the euro will regain bullish momentum strong enough to push it up to the one-year highs. In the United States, in addition to speeches by the Fed's policymakers, investors will turn attention to a weekly update on unemployment claims. This data somehow signals pending changes in the Fed's monetary policy. The overheated labor market gave the US central bank leverage to resort to aggressive monetary tightening. Until recently, investors have been still puzzled about what has been going on with the employment, and we encounter regular news about massive layoffs in top American companies. Interestingly, official reports have been logging robust employment growth and minor increases in jobless claims. And nowadays, pieces of the puzzle are falling into place. In March, the US Labor Department reported that more than 200,000 Americans filed for unemployment benefits week after week. The number of jobless claims is expected to grow by 240,000 in the week ended April 15, and such statistics should urge the Federal Reserve to take a pause in the cycle of rate hikes. Let me remind you that the Federal Reserve raises interest rates as a measure against soaring inflation. At the same time, the Bank of Japan has been pursuing the polar opposite strategy. It's still faithful to its ultra-loose monetary policy. Evidently, the strategy has proven its evidency. And the central bank maintains the key interest rate at a historic low for a long time, and inflation has been easing to the annual target of 2% slowly but surely. On a Friday in the annual CPI, investors hope to find fresh evidence of easing inflationary pressure in Japan. Perhaps it would make sense for the Bank of England to adopt the same approach. Indeed, consumer inflation in the UK has got stuck at two-digit values, and nevertheless, their hardline approach and pride would hardly allow the Monetary Policy Committee to give up their strategy. They are pushing ahead with an unrevised agenda, even though the domestic economy is slipping into recession. Retail sales data will be on tap on Friday, and the annual indicator is projected to fall to 3.1% in March from a 3.5% in February. Besides, retail sales could have decreased by 0.5% from a month ago, and such news is bearish for the pound sterling. The British currency could weaken briefly because the Bank of England's intention to go ahead with the rate hikes benefits the sterling. How we're going to be in the short term in financial markets, we will definitely tell you in our news releases. Subscribe to our channel and follow news with us. See you soon.